Mona, if you can make me co-host, I would appreciate it.
Yes, sure. I'm on it, Brother Wajdi.
How old the kids, Fatima?
Alhamdulillah, they're good.
How old are they?
12 and 9.
MashaAllah, good age, huh?
Yeah, alhamdulillah. Shariah should be joining soon here.
Brother Wajdi, you're a co-host now.
Teacher Mona, I think we can go live now and let the attendees in.
Yeah, sure. We're ready.
Assalamu alaikum, everybody, wherever you are. We are extremely happy, at the Muslim Education Trust to start these webinars, the journey in Ramadan. Our collective story as Muslims, how we enjoy Ramadan and how to engage in Ramadan. And today is our third webinar. We have a beautiful sister, daughter of ours, that is an expert, in Islamic finance, and a great brother, that founded, AZZAD Assets. Our dear Fatima, Iqbal married, to one of our young sons that attended our weekend school, and I had the honor to teach Wasim Khan, the son of Sister Manowar and Dr. Khalid Khan, founding fathers and mothers of our beloved community here in the Northwest in Portland, Greater Portland. May Allah bless, Fatima and Wasim and their children and their families, and may Allah bless Brother Bashar Qasim, for being available at the national level and international level, to engage, the Muslim community in managing the assets in a lawful way, in the halal way. Our webinar tonight or today, this afternoon, is about ZAKAH. ZAKAH is the pillar of Islam, one of the pillars of Islam. ZAKAH is a fascinating word in Arabic. It relates, to purification, cleanness, growth. It is a blessing and a praise that helps, community to develop, individuals. This form of charity helps, to purify, the soul, the wealth, and it increases the blessings in our lives and gains us a lot of reward, with Allah subhanahu wa ta'ala. Zakah is an obligatory tax or almsgiving, upon every Muslim, designated to help, the 8 categories that the Quran has defined in a beautiful way. The Quran, Allah subhanahu wa ta'ala says, إنما الصدقات للفقراء والمساكين والعاملين عليها والمؤلفة قلوبهم وفي الرقاب والغارمين وفي سبيل الله وابن السبيل فريضة من الله والله عليم حكيم. This beautiful, verse, that Allah subhanahu wa ta'ala has revealed it to us, it teaches us, who are the people that deserve our zakah, the once a year, almsgiving, that we give it for the love of Allah subhanahu wa ta'ala. In Surah At-Tawbah, Allah subhanahu wa ta'ala has says in, verse 60, chapter 9, verse 60 in the Holy Quran, indeed, prescribed charitable offerings are only to be given to the poor and the night, and to those who work on administrating it, and to those whose hurts are to be reconciled, and to free those in bondage, and to the debt-ridden, and for the cause of Allah subhanahu wa ta'ala, and to the wayfarer. This is an obligation from Allah subhanahu wa ta'ala and Allah is all knowing, all wise. When you look at these 8 categories, including, those that are, in bondage. Today, many of our students, they have student loans. They are in bondage, that, we need to consider how we can help them and heal them. And zakah is a source of healing and unifying as a source of development. So we are very thankful, to the AZZAD team. AZZAD team is also our asset manager for MET Endowment Fund. And we hope this fund will grow and grow and grow until we reach our peak, of $100 million. Bashar Qasim is a dear, beloved brother. He's the founder and the CEO of AZZAD Asset Management. Brother Bashar is one of the leaders and foremost expert in halal investment in the United States. We'll be able to send in the chat, the full bio. And our dear Fatima Iqbal, beloved, sister, daughter, is an investment advisor and a senior financial planner with the ZAT Asset. Today, they will take us, to this webinar in how to engage in the calculation of zakah. Fatima, we love you, and we love Wasim, and Brother Bashar, we love you, and we love your family, and we love all the ZAD team. Thank you very much for being available towards healing and unifying our ummah and our humanity at large as an American Muslim institution. Thank you very much. Without further delay, please welcome.
Jazakallah khair, Brother Wajdi, and thank you so much for that lovely introduction. We're very happy to be here to share some important information with you on how to calculate your zakah. So inshallah, I'll be going through a presentation with you. And hopefully you all are able to see the presentation now. So again, today, inshallah, we're planning on talking about calculating zakah on modern financial assets. And again, there's a lot to learn about zakah. It's, of course, as Brother Wajdi mentioned, the obligatory charity owed by Muslims. And the presentation we'll go through today will provide a brief overview of who should pay zakah, what types of property it is owed on, and how to calculate it on certain assets. So again, just a brief moment to introduce ourselves to you today. My name is Fatima Iqbal. I'm a certified financial planner at AZZAD, and I'll be giving the main presentation. We also have with us Bashar Qasim, who is our president and CEO at AZZAD Asset Management. And Bashar holds the CSAA designation for Certified Sharia Advisor and Auditor, and is one of the very few in the US who actually hold this designation. Before we begin, we just want to let you know a little bit about who we are so that you know where we're coming from when we talk about zakah. At the bottom of your screen, you'll see 7 of the services that AZZAD provides for our clients. And these include calculating purification and zakah amounts, which is the topic of today's webinar. AZZAD follows halal investing guidelines from AAOIFI, or the Accounting and Auditing Organization for Islamic Financial Institutions. And the zakah calculation guidelines in this presentation are going to follow AAOIFI guidelines. AAOIFI's comprehensive standards are based on consensus by internationally renowned Islamic finance scholars from 8 schools of thought. So please note that this presentation is not intended to be comprehensive in all schools of thought. At AZZAD, we take Sharia governance and compliance very seriously. And again, with the guidelines from AAOIFI, we also have an active Sharia advisory board. And as I mentioned, Bashar is our in-house Sharia auditor. Additionally, our zakah and purification calculations that we do are audited for accuracy by a third-party verification firm, the Islamic Finance Advisory and Assurance Services. So again, the webinar is intended to provide a brief overview explaining the general principles of zakah. And let's turn to today's topic, zakah. So first, let's understand the basics. Zakah is a financial obligation on every Muslim who owns a certain kind of assets that are worth more than a set amount, and this is known as the NISAB. If they have owned those assets for at least 12 lunar months, and this is known as the HAWL. Zakah is mentioned in the Quran 81 times, and it's often mentioned along with salah or prayer. So while giving to charity is a financial transaction, we know that it's an integral part of our spiritual health, and specific care really needs to be given in making sure that it's handled correctly. Zakah is, of course, an opportunity for us to bless our wealth by giving it to those who need. Zakah is obligatory on every living Muslim, regardless of gender, age, or mental status, who owns assets that meet the other conditions of zakah. However, if certain conditions are not met, then it is not compulsory. Now, let's take a look at some of the conditions that must be met before it becomes obligatory. I'll list a few of them now and then explain them in the next few slides. The conditions are owning at least the minimum amount of wealth, or the NISAB, the lapse of 1 lunar year, complete ownership of the assets by a particular person. There should be no other reason an asset is not zakatable, such as insolvency, and the assets must have some real or assumed growth. Now, first, the total amount of wealth owned by an individual must meet a minimum threshold called a NISAB. And while prophetic hadith described the threshold or NISAB for different assets, such as gold, silver, and livestock, the question is then what NISAB is relevant on our modern financial assets. The NISAB can be determined based on the NISAB of silver or gold, and this is equivalent to the current market value of 85 grams of gold or 595 grams of silver. According to the Hanafi and Maliki juristic schools, the NISAB is calculated at the beginning and end of the year, and changes in between are overlooked. So any increase of property after reaching the NISAB during the year is to be included in the total sum counted for zakah. And this is considered to be the easiest and most applicable among the other juristic views, which has made the majority of scholars adopt it. Now, the value of 85 grams of gold in early April this year was around $4,800. So any Muslim who owns zakatable assets worth $4,800 or more and has held these assets for 12 lunar months should pay zakah on those assets. And we'll go over which assets are zakatable in a moment. So what happens when the wealth reaches the minimum amount, or the NISAB? The next condition is that these assets should be held for a full lunar year, starting from the day it reaches the NISAB. And the Arabic word for HAWL refers to this holding period of 1 lunar year, after which zakah becomes due. Now, zakat al-mal is not due on a particular day for everyone, but it should be paid once per lunar year. Many Muslims choose to pay their zakat during Ramadan, both for the additional blessings of giving during this month, and also because it's easy to remember from year to year. Each individual can set their own HAWL date based on when they have held zakatable assets for a minimum of 1 lunar year. For people who choose to set a HAWL date based on the solar calendar, the percentage for zakat is raised up to 2.577% instead of 2.5%, because the solar calendar is a little bit longer than the lunar calendar. Now, there are 5 factors that determine complete ownership, and those are settling, ownership vesting, accessibility by owner, disposable by owner, and no interference by others. Before we discuss how to calculate zakah on growth stocks and income stocks, let's briefly recap the kinds of accounts that can hold zakah first. Now, we want to make sure that we can refer to the conditions of zakah to see whether the owner has complete ownership. Now, owners have full ownership in accounts like IRAs and education savings accounts, but they may have to pay taxes and penalties when withdrawing. So for accounts with full ownership, zakah is owed on the amount owned after taxes and penalties. However, there's some accounts where you may not have full ownership, like a 401k account, where your plan does not allow you to withdraw money. And in this case, there is no zakah since ownership is not complete. The third condition that must be met is that assets must be completely owned by a particular person or family. Assets owned by an organization or government are not zakatable, and zakah is liable on the assets that are completely owned and vested for the owners. Complete ownership requires that assets be accessible and disposable by the owners without the interference of others. So if you completely own an asset but would have to pay taxes or penalties if you sold it, this does not nullify the fact that you actually own it, and therefore it's zakatable. So for example, an individual who has an IRA can access the money in the account, even though they'd have to pay a penalty in taxes if they sold it before reaching retirement age. Again, this fact does not prevent the IRA from being zakatable, but zakah would be only calculated on the amount that would be left after applicable taxes and penalties. Again, on the other hand, an employee cannot withdraw from a 401k or a 403b account at their current job if they're below the distribution age. And again, this is important why you need to read your plan's provisions in your 401k summary plan description from your employer. If your plan states that you're not able to make a withdrawal before distribution age or leaving employment, the 401k or 403b account is not zakatable, again, until you leave the job or you reach the age when you can now withdraw. Again, if you're unsure about what your plan might say, look to your plan's provisions in summary plan description. Now, a person also must be solvent in order for zakah to be due from them. Now, if a person has debt that is immediately due that is greater than what they own, then they are not liable for zakah. Assets that are zakatable include gold and silver, cash, cash equivalents, assets intended for trade or sale, good current debt, livestock, crops, and minerals. All cash, gold, and silver are liable for zakah at 2.5% based on their values on the date of the HAWL. Now, if the HAWL is linked to the solar year, again, remember that zakah is 2.577% instead of 2.5%, again, to make up for that difference between the two calendars. There are certain assets on which zakah is not owed. Assets that are considered to be capital goods, such as tools or factories, are not zakatable themselves. However, the income that is derived from them is zakatable upon meeting the conditions discussed earlier. Furthermore, personal use property is not zakatable. So this includes one's personal residence, vehicles, clothes, and other personal belongings. Also, only halal and lawful assets are liable for zakah. So there's no zakah required on haram or unlawful assets, such as money derived from interest, gambling, alcohol, pork, stolen money, bribe money, or any other impure money. And such assets or money must first be returned to their lawful owners or donated to charity as purification. Now, purification is not a form of zakah or sadaqah, and it's only intended to rid oneself from impure money that one never intended to benefit from. And in modern financial times, this includes securities or stocks that may be deemed to not be halal according to Sharia investment guidelines, including financial options and derivatives. Again, we at AZZAD Asset Management use halal investment guidelines established by AAOIFI and adopted by the AZZAD Sharia Advisory Board. Finally, assets intended for retained ownership and for the purpose of deriving income are not zakatable. This means that zakah is not owed on the current market value of investment property and income-oriented stocks. Instead, income derived from them is zakatable, as is the case with capital goods. So for example, zakah is not paid on the market value of a rental property. However, income that is derived as rent and is held for the HAWL period is zakatable. In calculating zakah, we start with the zakah base, which equals all the zakatable assets minus liabilities or debts that are payable by the HAWL date. Zakah is again not obligatory on wages, salaries, and income at the time of receiving such income. Zakah is assessed based on conditions we discussed earlier, and again must meet the ownership and HAWL period requirements. Now let's also look at how debt relates to zakah. If you make a loan, you owe zakah on any money repaid as of the HAWL date if it's in good standing. If the loan is past due and in bad standing, no zakah is owed until the owner recovers the debt, and the zakah is paid once for all past years it was in bad standing. If you've taken a loan and owe debt, the amount due before the HAWL date is deductible from one's zakah base. However, debt payments that are due after the HAWL date are not deductible from the zakah base. So for example, a person may deduct their current home mortgage payment from their zakah base, but not the entire loan amount. The interest portion of any debt acquired in a non-halal way should not be deducted from the zakah base. However, one may deduct debt that is a result of acquiring commercial assets from one's zakah base. This relates to modern financial assets since bonds are also a form of debt. However, interest-based debt securities, including bonds, banking notes, CDs, commercial paper, money markets, and others that are liquid are liable for zakah only on the principal amount or market value, whichever is lower. Any gain due to increased interest accrued or market appreciation is not recognized as lawful and is not eligible for zakah. And such gains should be considered unlawful and purified by donating to charity. If you make a loan, you owe zakah on any amount repaid as of the HAWL date if it's in good standing. And again, if the loan is past due and in bad standing, no zakah is owed until the owner recovers the debt, and the zakah is paid once for all past years it was in bad standing. If you have taken a loan and owe debt, the amount due before the HAWL date is again deductible from one's zakah base. However, debt payments that are due after the HAWL date are not deductible from the zakah base. So one common question we often get is about a person who may have a current home mortgage payment. In this case, a person may deduct their current home mortgage payment from their zakah base, but not the entire loan amount. The interest portion from any debt, again, acquired in a non-halal way, again, should not be deducted from the zakah base. Now, again, zakah is obligatory on assets that have been held and saved for one full lunar year after reaching the NISAB, which is, again, the minimum amount of wealth after which zakah is due. This, again, of course, excludes any interest income that may have been unlawfully earned during that time. Now, many of us acquire money at different times throughout the year, such as from salary, gifts, inheritance, rental income, etc. So if you choose to be very specific and only pay zakah at the time it becomes obligatory, then you can track the earnings and pay zakah for each amount separately once 1 year has passed from the date on which you took possession. But of course, that can be very complicated. So an easier method is to pay zakah on all the cash you've held for 1 year since reaching the NISAB. This will bring a greater return and a reward and raise you higher in status. And it's easier and is more generous towards the poor and needy and others who are entitled to zakah. So for example, if you 1 year ago had $10,000 in your account and the value dipped mid-year to $5,000, and now you have $15,000 in your account, with this method, you would pay zakah on the full $15,000. Now let's talk a little bit about zakah on stocks. So we've gone through who is liable for zakah and what assets and account types are zakatable. Now, when we talk about the calculation of zakah on stocks, we'll be talking about common stocks, since we get a lot of questions about them. And of course, again, our clients at AZZAD know that we calculate their zakah for them on an annual basis, and we send a statement showing the total amount to be purified and paid from their portfolios. Now, stocks held for the purpose of growth and appreciation are like assets that are held for the purpose of trading and are considered commercial goods, or in Arabic, arud tijara. Again, here where arud means non-cash and tijara is items that are intended for profitable trading. For these shares, their zakah base will be based on the total closing market value of the shares owned, or again known as their net asset value, on the HAWL date. And this net asset value is then multiplied by 2.5%. To give you an idea of how zakah calculation on growth stocks is done, let's take an example of an IRA account investing in a growth stock that has a market value of $50,000 on the HAWL date. And to calculate the zakah, we must account for a 10% penalty if the person is under the age of 59.5, and we must also take into consideration their tax bracket. So here, let's assume this person is under age 59.5 and in a 15% tax bracket. Here we calculate zakah by multiplying $50,000 times 1 minus the penalty rate times 1 minus the tax rate by 2.5%. Again, assuming we're using the lunar calendar. If we're using the solar calendar, again, we have to multiply by 2.577%. This gives us the zakah due on the amount they would have had in hand if they were able to withdraw from their IRA account. Now, stocks held for the purpose of deriving an income, let's say such as dividends, are different from urud tijara, since the primary intention of purchasing these shares is not for trade and appreciation. In this case, the zakah is not paid on the market value of the shares owned, but on the zakatable assets in the balance sheet allocated to the shares owned. So in this case, we actually must look through to the underlying company's balance sheet. The portion of company assets which are used for income generation, such as capital goods, properties, or equipment, are not zakatable. However, other assets such as cash or inventory are zakatable. So for example, such a company might have, let's say, 80% in assets that are not zakatable and 20% that are zakatable. Any current debt and long-term financing of zakatable assets is subtracted from the zakatable assets and is then divided by the number of outstanding shares. We're then left with the zakat base, or zakatable assets per share. Now again, we understand this calculation on income stocks is not as simple as growth stocks. And again, one of the reasons why we help our clients calculate this. Now, again, as a reminder for all of us, these are the categories of people or the causes that are eligible for zakah. Now, the difference between the masakin, which are the needy, and the fuqara, or the poor, is that the poor have nothing, but the needy are those who have something, but it's really not enough to live decently. And again, the masakin have more than the poor, but again, they lack adequacy. Now, Allah referred to the masakin in the Quran in Surah Kahf, chapter 18, verse 79, in the story of Khidr and Prophet Musa alayhi salam. And the masakin here again were the poor people who owned a ship, and they were the ones who actually worked in the sea. And speaking of eligible recipients, this year, many American Muslim organizations and again, individuals are struggling and facing financial difficulties. Again, we've seen many of our Islamic centers, our masajid, and charities really in need of your donation. So really, we find that this to be not just an opportunity for us to purify our own wealth, but also to help empower our own communities. Now, let's talk a little bit briefly about purification, which is different from zakah when we're talking about investing. Part of the process of making stock investing halal is screening companies' lines of businesses as well as their financial ratios. These are some of their screens and ratios according to AAOIFI. Sometimes it's not possible to know exactly where all of a company's revenue comes from, or if the revenue is a trivial amount. And because of this, Muslim investors should purify their investments by donating to charity the small amount of revenue that may have come from impermissible sources. Purification is different from zakah, and again, it should be calculated and deducted before calculating the zakah. Abdullah bin Umar was a companion of the Prophet Muhammad ﷺ and the son of Umar bin Khattab. In reference to purification, Abdullah bin Umar said, "To return 1 dirham of haram is more beloved to me than paying sadaqah of 100,000 dirhams." And then he continued by adding another 100,000 dirhams and another 1,100 dirhams until he reached 600,000 dirhams. So again, we pay a lot of importance, as we should, on zakah, but we also need to make sure that we are attending to any purification that may be due from our wealth. Now, some tools for donors. Before giving your money to a charity, you want to make sure that the organization is legitimate and your donation will actually reach those in need. So here we've listed a few tools that can be helpful. The IRS Nonprofit Charities Database has a tool called the Exempt Organizations Select Check Tool. And this tool allows you to enter the name of an organization and actually see if it's exempt or not. And this is important to verify if you are wanting to claim this donation as a tax-exempt deduction. If the organization is not exempt, again, your donation will not be tax deductible. Charity Navigator also rates charities based on their financial health, their accountability, and transparency, again, to help donors make informed decisions about their contributions. They have evaluated over 8,000 tax-exempt charities. So again, if your chosen organization is not included in their list, it's a good idea to try to find out why. And finally, there's an organization called GuideStar, which maintains information on 501c3 nonprofits. And they also include important financial documents such as the organization's Form 990 that can again help you evaluate the legitimacy of an organization. Now, all nonprofits are required to have an up-to-date 990 available to the public. So again, if your organization that you are interested in does not have this, it can be a good idea and opportunity to reach out to them and request more information. Now, again, when we speak with many of our clients, when we talk about ZAKAH, this also raises the idea of how can we do charitable giving that creates greater impact. And there are various tax advantage ways that you can also try to enhance your charitable giving so that it can also fulfill the obligations for ZAKAH, but can also help you really be able to utilize your wealth in a more tax efficient way. Some of the ideas that we use with our clients are donating appreciated securities, establishing different charitable funds and trusts. And with this, we'd like to open the floor to any questions that the audience might have.
Fatima, there is a question. First of all, Assalamu alaikum, Brother Bashar. Welcome on board.
Wa alaikum assalam wa rahmatullah. Thank you, Brother Wajdi, for inviting us, and Ramadan Mubarak to everyone.
Alayna alayk, inshallah. May Allah bless you. And
Allah make it the precious days. Ramadan goes so fast, but inshallah everyone will enjoying these moments.
Alhamdulillah. May Allah bless you and bless the team and Fatima and everybody in the ZAD, and for being a great source of healing and unifying in our asset management. Jazakumullah khair, inshallah. Fatima and Brother Bashar, there's a question, in the question section. Does credit card debt count a debt?
That's very good question. You see, the debt that is deductible is the current debt. So like, for example, the debt of the mortgage is not current, it's deferred, not deductible. But any current debt, especially the credit card, because, this is like charging interest, and you should avoid this and promptly pay for any debt you incur on the credit card. This can be deductible from your ZAKAH base. So when you calculate the zakatable assets, you come and you reduce it by the credit card debt, and then you subtract it and you pay the ZAKAH on the net. Correct.
Thank you very much. Any members of the audience, if you want to answer your question live, we will be happy to give you that privilege. And then if you don't, you can ask in the chat, please. Have any question?
Brother Wajdi, Fatid Mahmoud raising her hand for a question. You're mute.
Fatin, go ahead and ask your question, please.
Assalamu alaikum.
Wa alaikum assalam.
I'm Fatin, not Fatin, Fatin.
Khair, inshallah. Jazakallah khair for this very valuable information about the ZAKAH. We really enlightened us with a lot of information. Barakallah fiqh. I just have a simple question. You divided the stock in two sections, one with ZAKAH, which is the normal stock, and the other one without. You don't have to pay ZAKAH, which is generating income. Most of the stock, they give you a dividend. So if we consider those who give you a dividend, then they will be disqualified to pay ZAKAH for that one. So I think this point is very critical to differentiate between the two types you mentioned for the stock. Jazakallah khair.
Yeah. So as Fatima mentioned, usually, people, they own the stocks of these companies for two purposes. The first one is to benefit from the price movement, where they are waiting to sell at a higher price. And that fit what they call the meaning of tijara, because the tijara is the intention to trade to achieve the profit. So those are treated as urud tijara. and the zakah would be based on the market value. Now, the other type of stocks, they are zakatable also. So all the stocks are zakatable that you own. They are zakatable assets. But in the second one, where you intend to derive an income, that fall under what they call urud mustaghallat, and or like capital goods. Those are zakatable based on the zakatable assets in the balance sheet. So you have to open the balance sheet and look what are cash and cash equivalent, what are, if there are inventory for sale. So you have to do it on the balance sheet level. And then you assess the zakah amount on those. So there really depends on the type of stocks you own and the investment objective that you want to achieve with those. So that's very, very important. Yeah, and usually those are really zakatable at lower rate because you are intending to achieve an income, may not be as generating profit, for example, as the one where you intend to benefit from the price movement. Yeah.
Thank you very much, Dr. Fatin, and thank you very much, Brother Bashar. Rashad Kazemi, you raised your hand. Rashad Jan.
Assalamu alaikum. Can you hear me?
Yeah, we can hear you.
Okay, assalamu alaikum. Thank you for the hosts for providing this informative webinar. My question is in regards to rental properties. There's two parts. The first is if the rental properties have a mortgage on it, so essentially there is a debt owed, how would we consider that in any way towards it being zakatable or not? And I'll let you answer that and then I have a follow-up question.
Beautiful question. Okay, again here the same like what we did in the stocks, where the real estate that you are buying, let's say somebody is buying and selling these real estate, so he's a real estate trader, correct? So the intention is actually not to buy and live in that real estate, correct? So in this case, we will treat the real estate properties that he is trading for. And again, what's the difference between sell and trade? Both they have sell, but the sale in the sale has not necessarily to have the intention to sell to achieve the profit. So the trade has the sale element in it with the intention to achieve the profit. So that would be falling under urud tijara. In this case, if they are like urud tijara, not your house where you live in, correct? Then those would be zakatable at the market value. However, you will reduce any mortgage associated with those assets, correct? So let's say you have 5-6 properties, their value is about $2 million, but you have debt about 1 million. So the zakah will be on the net. However, if you are your own residence where you really not intend to trade, you intend to own this house to live in, to provide your main residence, in this case, the house itself is not zakatable, correct? Because it's not urud tijara. So you cannot reduce the mortgage because the mortgage is not current debt, is a deferred debt. So you want to really make a good distinguish between the two type of assets, although they both are real estate. I don't know if I answered your question.
Also, I believe on rental, like this is a rental property where you're purchasing it with the intent to keep it.
Rental property, then again, if it's really, that would fall under urud mustaghallat. So the rental property itself, it's not intended to trade, correct? So you're buying it to derive an income, you're renting it. So itself is not zakatable. So that also, because it's not zakatable, the mortgage is not deductible from it, correct?
Yes.
You cannot deduct the mortgage from it because the principal itself or the value of the house is not zakatable. You would only be paying zakah on the rental income after it lasted with you the whole, whatever left from it after lasting the whole hawl, that amount is zakatable. So technically, if you think about it, the rental income is zakatable not because an income, but because it really became an asset lasted the whole hawl. Correct? So there is really, technically, like if you go to an accountant, most of these scholars, unfortunately, they're not CBAs. So, but you can tell, you can understand from their answer when they say, oh, only the rental income that lasted the whole hawl. Well, it's not rental income anymore. It's really became an asset. It joined your assets in day one, and after 354 days, correct? Whatever left from it. So these are becoming really part of your asset that satisfied the hawl requirement, and of course the NISAB because it is above the NISAB.
Well, thank you. And just a follow-up question. At what rate would the rental income be taxable? I was reading some hadiths about, 10% when it's...
Yeah. Again, some people, they actually make what they call some kind of qiyas. But the qiyas here is not really necessary, it is really like the scholars elaborate a lot on what they call al-mal al-mustafad, zakat al-mal al-mustafad, the earned income, So, this is really not, it's not like, they go and resemble that to crops or to minerals. That's not necessary because if they are really zakat, what they call mal zakawi, they're zakatable assets, you just pay the zakah exactly as the zakah of gold and silver and money. They're equivalent to that. There is actually zakah is not an income, except the produce is really different. But zakah is a balance sheet item, not income and loss statement. Somebody could be earning $1 million and spending $1 million. So there is no zakah on that money. Zakah, it's really different than taxes. It is really made on assets, not on income. So as the Prophet, peace be upon him, La sadaqata illa an dhahri ghina. So it's really all the, if you go all the script, it's always on the referring to the assets, not necessarily. Some people, they may earn $1 million, but they're still poor. Let's say they have a situation where they spend that $1 million, they have, medical bills that they have to pay, or they have debt to satisfy. You see what I'm saying?
Yes.
Correct? People confuse this, and actually we notice that there's a lot of confusion in our community, like with the with different interpretation, etc. What we do at AZZAD, we subscribe to AAOIFI, the organization that Fatima referred to in the beginning, the Accounting and Auditing Organization for Islamic Financial Institution. This organization is really, they set the standards, and they have a specific standard about zakah, standard number 35. You can download their Sharia standard. They publish more than 60 Sharia standards. They cover all kind of standards upon which you can create a financial product in investment, in banking, in takaful. And of course, they have one about waqf, and they have also about zakah. So if you download the standard number 35, and I refer AAOIFI, AAOIFI was founded back in 1991 by what they call the most trusted scholars, the scholars of the Ummah, like, diverse. They cover more than 54 Muslim countries around the globe, and scholars from all kind of madahib. Actually, the madahib that there is 8 madahib. So these are scholarly institution that we, even at AZZAD, we rely a lot on their standards because these are very well researched, and AAOIFI has a lot of resources So I really advise people to consider AAOIFI or maybe the Fiqh Council of OIC, these scholarly institutions, or the Kuwait Zakah House. There are few institutions that they're really well known for their zakah knowledge that we really refer to. But these, like, you know, individual fatwas, with all due respect, you know, they don't substitute what we call Ra'y al-Jumhur, the consensus. But the consensus, if you read all of them, they emphasize that zakah is actually on assets. And standard 35 available in maybe, like, you know, 6-7 languages, English, Urdu. You can download it from AAOIFI.com, AAOIFI.com, and you can go to Sharia standards and download it. I advise every Muslim or professional to have copy of AAOIFI standards. You can download it. It's like it's a big book, but you don't have to go through all of them. You can just go to standard number 35 and study it. And also, you can also go the standard number 21, which is about halal investing, that emphasize on a purification, the one that Fatima referred at the end of the presentation.
Jazakallah khair. Thank you. If you wouldn't mind, I have just one other question, is in regards to contractual investments for a set period of time. So let's say, for example, 10-year investment. Are those zakatable immediately, or is it something that would be zakatable in the future?
The question we would ask, you know, do you have access to that money? You can, is that money available to you, or it's locked for 10 years?
It's not available.
Not available.
Locked, yeah. So,
yeah. So in this one, you can maybe treat it like, you know, maybe like the insolvent debt. So once you get the money, you can pay the zakah for 1 year, regardless of how many years that money is stated. And once it become available, accessible to you, then that money becomes zakatable on a yearly basis.
Okay, thank you, Jazakallah khair.
I see a question also in the chat box. How can one calculate zakah for gold?
Zakah for gold?
Yes.
Again.
How can one calculate zakah for gold?
Yeah. So again, the gold, there are really some differences in different opinions about it. You know, again, we need to ask the question, is this gold that is used as a wealth storage, where you really intend to store it like money? You know, if this is the case, then that becomes zakatable on all the schools of thought. You know, if it's really using it as a way, as a storage of wealth, like a saving, like money, like this is what they call zakat al-dhahabi wal-fidda. Now,
Brother Bashar and Sister Fatma, with your permission, do you mind if you elaborate more? Because we have some audience here that are new Muslims, you know, the difference between jewelry, adornment, and jewelry for savings.
Got it. So in this case, but if it's really used as a jewelry, as ornament, then that is not zakatable except in the Hanafi school. Regardless, Hanafi school, whether ornament or non-ornament, it is zakatable. The other 3 schools, it is zakatable. It is not zakatable as an ornament, both gold and silver and other jewelry. You know, and again, the question becomes like, you know, what is really your intention of owning that, you know, gold? And the niyyah, the intention, is really the key point here. So you really know exactly. Let's say somebody having like a 3 kilogram of gold, but they use maybe like, you know, a few ounces of it on a daily basis, and the other stored in the bank, never been accessed for a long time. You gotta question that, and that, you know, that means it's really intended for storage, maybe, you know. So you gotta be careful with that. So in this case, you know, I would recommend that you treat it as, you know, a storage of wealth and make it zakatable. But if something that you really use it, regardless how much, you know, as long as this is use it, you know, Islam doesn't put restriction on somebody to enjoy their wealth reasonably, of course. Yeah, that would not be zakatable according to the other three schools of jurists, you know. Now it's used if it's intended to trade somebody, for example, in the business of buying and selling gold. And again, then that would be falling under what we call urud tijara, would be considered as inventory for sale. And that would be treated like, you know, the zakah of money and, you know, or zakah of gold that becomes zakatable. Again, the 2.5% of the value.
Any other questions from our audience?
I see there is a one children education accounts. Okay, yeah. No, that's, I think we handled all of these questions.
Brother Bashar, may Allah bless you, and Sister Fatima, you're always available for our beloved community. Today we have in the audience many people watching in YouTube and Facebook, and also live here with us here in our library at the Muslim Education Trust. We have a young gentleman that moved from Virginia, and he joined the Meyer Memorial Trust. So Bhai, do you mind if you be available just to greet everybody and introduce yourself? He's the Deputy Director of Investment with Meyer Memorial Trust, a local foundation here in Portland, Oregon.
Nice.
Suhail, are you there?
Hello, brother. Assalamu alaikum. Can you hear me?
Can you be visible, Suhail, so everybody can see you?
Sure, no problem. Assalamu alaikum, everyone. So yes, I'm actually, I relocated from New York, New Jersey. I'm natively from there. So yeah, I joined my Memorial Trust recently. Well, really it was last year, but so I'm the Director of Investment Operations. We manage a $1 billion portfolio across a lot of different asset classes. And so I help and manage the portfolio with my boss, who's Rakai Adams, who I know is very good friends with Brother Wajdi. And before then, I spent most of my career working prior to my Memorial Trust. I was at PIMCO, which is a big fixed income asset manager in Newport Beach. And then prior to that, I had worked primarily in the hedge fund industry for about a decade in New York. So, but very much a pleasure to be joining the Portland community. And inshallah, we'll be able to connect with the rest of you more in the future. Thank you.
Thank you very much, Bhai. May Allah bless you, and welcome to Portland. It's a great gain for our community, Suhail.
Yes, thank you.
It was nice to pray with you yesterday in our Tawiyah. Thanks,
yes,
thank you. Thanks. If anybody has any questions, you know, before we announce our upcoming webinars and events. Sister Fatima, you know our love and respect for you, and Brother Bashar, you know our love and respect for you. May Allah bless you and reward you, and being a great American Muslim institution that heals our money and make us focus in a more social responsible way. So we are very thankful to each one of you. For our audience, wherever you are, we have some cousins, you know, from England that are watching, and we have some members of our dear digital marketing young, you know, lady, you know, from Jeddah, Saudi Arabia, and many others from everywhere. We are very thankful to each one of you, and we are very thankful to our beloved brother Bashar and our beloved sister Fatima. Tomorrow we have, you know, a journey through the Quran. We have a great Hafiz of Quran. He's a PhD student in physics, and with the 2 ijazas, you know, and he's part of our team leading our Tarawih prayers and our 5 daily prayers. Brother Mustafa Diremi is an Egyptian American. May Allah bless him. So join us tomorrow at 2 o'clock Pacific Standard Time. And I'm very thankful to our community relations team led by Muna Al-Madhoun and Jawad Khan and Juwaria Sayyid and and Huda Al-Barati, and Brother Suleiman Koma, and Jibril Franco. May Allah bless you and reward you for everything that you do in behalf of all of us. Thank you very much. And don't forget MET in your Zakah fund and your charity to advance our agenda and to heal our Ummah here in Portland, Oregon. And we are fulfilling all the requirements that Sister Fatima has put. We are a 501c3. We are a solid organization with 29 years of experience and integration by design to claim our narrative in our public square. Thank you very much, Brother Bashar and Sister Fatima. May Allah reward you and bless your families in this blessed month. And thanks to all the audience and to all the supporters of MET. Thank you very much again.
Thank you.
All right,
Thank you, everyone. Assalamu alaikum.
Thanks, everybody. Thanks.